Hi everyone, thanks for joining me for today's live session. I've had some great questions come in, and that's regarding investing. Obviously, for those who don't know, I am a financial educator and financial literacy coach, and certainly investing is one of my strengths. Absolutely love it. With over 20 years financial advice background, certainly my big passion. So let's take a look at my first question. And this is, I've never invested before, so I was wondering if ETFs are a great way to start. Now, in my view, ETFs, it stands for exchange traded funds, and yes, they are definitely a great way to start. So if you're a regular follower of mine, you'll know that I do a weekly video on a Tuesday that covers off the New Zealand Stock Exchange, being the NZSX 50. Now, if you are wanting to invest into the NZSX 50, there is a provider here in New Zealand called Smart Invest or Smart Shares, and they have a ticker code of FNZ, and that is one of the ways that you can actually invest into the New Zealand stock market using an ETF. Now, with an ETF, exchange traded fund, what that means, if you're investing in the New Zealand market, it means that your one share that you're holding in, say, FNZ, has exposure to all of the 50 companies that are held on the New Zealand main board. So it means for you, you don't have to worry about picking and choosing which are the best investments to go into. Now, if a company leaves the main board, then or another one enters, your money is still going to be exposed to those top 50 companies. So if a company leaves and it's replaced by another one, that is again where your money will go. It will go out of the one that's left the top 50 and it will have exposure into the new one. Like I said, it is a great way to get started with investing and take away that stress from having to decide, is this a good share? How do I go about it? All of those sorts of things. Now, Smart Invest, in my opinion, for New Zealand is a great way to have exposure to managed funds. To have exposure to ETFs. They have quite an extensive range. So you're not just limited to the New Zealand market. There is exposure to Australia, the world, the United States. There are even sub areas. If you're into crypto, they have a ETF on crypto, gold, precious minerals, healthcare. I think there's over 50 different funds that they do have available. So definitely take a look at that. Smart Invest or Smart Shares, type in either and that should come up, and you will be able to have a look. And again, do your own research, but with any of those ETFs, it means that you've got exposure to all of the companies that make up that one fund. If you go on and take a look, you can go and download, obviously, their information statement, the product disclosure statement, and that will give you the top holdings in that particular fund. Will also say what fees are exposed to it and any other information that you're trying to find. Like I say, I use them. They're certainly a great vehicle. And also, if you're using the Smart Shares, it means because they're denominated back into New Zealand dollars, for those people that are concerned about the foreign investment fund rules, it does not apply because it is a New Zealand dollar-based investment, even though it's got exposure to global investments. So that's a really good place to start. ETFs, definitely in favour of them. Right, I've got another question. I'll just come back. Yeah. Right, so another question I've had come in, it's saying, is it better to invest with, say, Sharesies or to add more to KiwiSaver? Again, that's a really good question. And if, in my view, if you are good with money and you're good with saving, then certainly looking to put money into additional vehicles is a great way to start, especially if you're under the age of 65. My reason for this is because whilst I'm definitely pro KiwiSaver, I definitely like it. KiwiSaver, for most people, there are certain extenuating circumstances, but KiwiSaver is locked up until you're 65. Now, you may want to have a choice of perhaps reducing your work hours or changing direction, even retiring early. If you have money in other vehicles outside of KiwiSaver, then this gives you that freedom and flexibility to do so. Now, you don't necessarily have to go into Sharesies per se. I mean, Sharesies too is a great platform. It's a great way to start if you're new to investing and you're wanting to dip your toe in the water. But if you're thinking, I've got no idea where to start, how I should invest my money, a managed fund is, in my view, a really good way to invest. Most managed funds are investing very similar to your KiwiSaver. So let's say you're a balanced investor and you might have, say, 60% of your KiwiSaver exposed into what we refer to as growth assets, which are things like share markets and property, and say 40% into fixed interest and cash, which is the low risk area of a portfolio that it has exposure to cash, and also the bond markets, both locally and globally. Now, you can use a managed fund that will do exactly the same thing as that. The main difference for people under the age of 65 with managed funds is that you've got liquidity. So that means that, heaven forbid, if something happens or if you want to change your circumstances, you have access to money in a managed fund. Like KiwiSaver, it is definitely a long-term savings vehicle, so don't use it as an everyday savings account, that sort of thing. You need something else set up for that. But if you're wanting long-term savings and you're not sure where to start, what to do, certainly look at doing a managed fund, and there are a number of providers that will do that. Maybe even your KiwiSaver provider may have a managed fund offering. You could perhaps talk to them as a choice, or share brokers. There are a lot of financial advisors out there that can recommend. Okay, so that's a great place to start. I hope that's helped. And there was one more question. And it was really along the similar lines, actually. It's saying, what are my thoughts on managed funds rather than choosing shares to invest in yourself? So I've just explained the benefits of managed funds, but in addition to that, as opposed to selecting the shares yourself, under a managed fund arrangement, the fund provider will take care of that administration and they will do the investing on your behalf. So it takes away that selection, if you like. And for a lot of people who don't know where to start investing, choosing individual shares and methodologies around how to do that can be really overwhelming and daunting. Therefore, if you invest into a managed fund, it takes away that day-to-day worry from you thinking, have I made a good decision? How much do I have exposed into this particular share? All of those sorts of things. So if you are certainly what I would refer to as a passive investor, that doing the research on a company, working out methodologies and bits and pieces for investing into shares, managed funds, in my view, is definitely a great way to go about it. You can contribute to it regularly or ad hoc, whatever is more convenient for you, and someone else is administering that for you on your behalf. So those are some things to really keep in mind. Now, something else that I want to talk about as well, we've mentioned KiwiSaver. For those of you who are unaware, KiwiSaver contribution rates are increasing from the 1st of April. So what that means is if you are currently contributing 3% of your wage or salary to your KiwiSaver, from the 1st of April, your employer excuse me, your employer will be obliged to increase your contribution rate to 3.5%. They too will also match your contribution rate at 3.5% if they're not doing that already. If you're contributing higher than that, then you don't have to worry because it's not applicable to you, it's irrelevant. However, if you're on that 3%, it is. Now, if you are perhaps finding money a little bit difficult to manage at the moment, and I know there are a number of people that are doing that, you make sure you get into your employer before the 1st of April and request that your contribution rate stay at 3%. Personally, I'm definitely in favour of increasing it if you can afford it. That's the caveat, is that if you can afford it. So I'll just check the chat. It doesn't look like anything's anyone's come in with anything. So I really hope that's helped. I love being able to answer these questions for people, so do keep them coming. Feel free to reach out to me anytime if you've got any questions with investing, whether with your finances, anything like that. I'm here to help. So take care for the rest of the week, and we'll see you again.